Welcome to the deep dive. Today, we're zeroing in on two commodities with, well, quite a history: gold and silver.
Mm,
You shared a really insightful article, What Factors Influence the Price of Gold and Silver by Doug Young. Our goal today is sort of to cut through the noise and really highlight what makes their prices tick.
exactly. And Doug Young, I mean, his background in finance, commodity trading,
Hmm.
he's got a great viewpoint on this.
Right.
His article does a really good job breaking down all the different forces, the basics like supply and demand, but
Mm.
also uh, the bigger economic picture, investor sentiment, all of that.
Yeah, and getting a handle on these things isn't just like academic if you're maybe thinking about investments or just trying to make sense of the economic news.
Or even just curious.
Or just curious, yeah.
Yeah.
Understanding what drives these prices is super valuable. Okay, let's dive right in. The most fundamental thing first: supply and demand.
Okay. Yeah, at its absolute core, it's
Yep.
classic economics, isn't it? Supply and demand. If demand for gold or silver goes up, and supply, well, if it stays flat or drops.
Prices go up.
Generally, yeah, prices rise. And the opposite is true, too. More supply than demand, prices tend to fall. The real key is figuring out what actually affects that supply and that demand.
Right. Okay, so let's unpack the supply side first.
Yeah.
What what impacts how much gold and silver is actually out there?
Well, production is obviously critical.
Okay.
How much is being mined? That's directly tied to mining costs. Are they going up? Does it cost more to pull it out of the ground?
Mm-hmm.
And then there's the political stability of the places where the mines are. Big factor. Any unrest in a key mining region can definitely disrupt supply.
Okay.
And technology, too. You can't forget that. Advances in, like, extraction methods can sometimes boost production quite a bit. So really, anything making mining easier, harder, riskier, it all feeds into the supply picture.
Huh. Interesting. So like a breakthrough in mining tech could actually mean more supply and maybe potentially lower prices.
Generally, yes. More efficiency can mean more metal. But you also have to consider if that extra supply is hitting the market, just as demand is also jumping for some reason.
Right. It's all connected.
It is. And another really specific thing for gold supply is what central banks are doing with their reserves.
Ah, yes, central banks. They always seem to be involved somehow. How do their actions move the gold market?
Well, they hold a lot of gold. It's part of their foreign currency reserves. So when they decide to buy or sell large amounts, it really sends a ripple, a signal through the market.
A signal of what, though?
Usually confidence. If, say, several central banks start buying up gold, the market might see that as a sign they believe gold is a stable, reliable asset. That perception can then boost demand and, well, push prices up.
Okay, so their actions are like a big flashing sign about confidence in gold?
You could say that, yeah. It's
Yeah.
a major indicator people watch.
Okay. Let's switch gears slightly to silver. The article really stressed its industrial demand. That makes it different, doesn't it?
Oh, hugely different. It's a really crucial point. Gold demand, it's mostly investment. Jewelry,
Right.
but silver, it's used everywhere industrially. Electronics, solar panels, medical devices, tons of applications.
So it's more tied to the real economy.
In many ways, yes. Because of that, silver's price tends to be, well, more sensitive to economic shifts and changes in technology compared to gold. If the economy's humming along and manufacturers need silver for, say, lots of new gadgets.
Demand for silver goes up.
Exactly. That can give silver prices a real boost. So silver kind of has these two sides. It's an investment, sure, but it's also a vital industrial commodity.
Got it. A foot in both camps. Okay, now this is where it gets maybe even more complex. How did the big overarching global economic conditions factor in?
Oh, they're a massive influence.
Yeah.
Huge. Think about uncertainty. During recessions, financial crises, remember 2008?
Oh, yeah.
Or even the start of the COVID pandemic, in times like those, gold and silver often get seen as safe havens.
Right. That flight to safety idea. People get
Mhm.
nervous about stocks or currencies.
Exactly. Investors look for something they think will hold its value when everything else feels volatile. That increased demand for safety can definitely push precious metal prices higher.
But what about the flip side? When the economy is doing great?
Right, good question. When the economy is strong, investors often feel, well, more optimistic. They might shift money into assets they think offer higher returns, like stocks.
So less demand for gold and silver.
Potentially, yes.
Yep.
Less demand for them purely as safe havens, which could put downward pressure on prices. But, and this goes back to silver.
Ah, the industrial demand.
Exactly. A strong economy might mean more manufacturing, more technology production, which could still support or even boost silver prices because it's needed for industry.
Okay, so a booming economy isn't necessarily bad news for silver, even if it takes some shine off gold's investment appeal. Interesting. Now let's talk inflation. That's been definitely a hot topic lately. How does that play into gold and silver?
Inflation's a big one.
Yeah.
When the cost of everything is going up, the value of your cash, your purchasing power, it goes down, right?
Right, your dollar doesn't buy as much.
Precisely. So to protect their wealth from that erosion, investors often turn to assets like gold and silver. They're seen as stores of value, things that can hold up better against rising prices.
Like a hedge against inflation.
That's the classic term, yeah, a hedge. We saw this back in the 1970s and again more recently in the U.S. after the health crisis disruptions. High inflation often coincided with gold prices really taking off. It feels tangible, something that might keep its value when paper money is losing its punch.
Makes sense. Trying to stay ahead of rising costs.
Yeah.
And closely related, I guess, is the currency itself, specifically the U.S. dollar.
Absolutely critical. Gold and silver, they're typically priced in U.S. dollars globally. So the dollar's strength or weakness has a direct impact.
How so?
Well, if the dollar weakens against other major currencies like the euro or the yen, it effectively makes gold and silver cheaper for anyone holding those other currencies. They can buy more ounces for the same amount of their own money.
Ah, so cheaper means potentially more buyers, more demand.
Exactly. That increased affordability can boost demand and help push prices up. And conversely, if the dollar is really strong, it makes gold and silver more expensive for foreign investors, which could dampen demand.
Okay, so weaker dollar, generally good for gold and silver. Strong dollar, potentially a headwind. Got it. What about interest rates? That's another one you always hear linked to gold.
Yeah, there's generally an inverse relationship people talk about. Think about opportunity cost.
Okay.
Gold and silver, they don't pay interest,
Right.
right? They don't generate income like a bond or even some stocks. So when interest rates are really low, the cost of holding a non-yielding asset like gold is also low. You're not missing out on much potential return elsewhere.
Right. If savings accounts are paying almost nothing, gold doesn't look so bad in comparison for just sitting there.
Exactly. It makes gold and silver relatively more attractive. But when interest rates start to rise, those other investments like bonds start offering better returns. That increases the opportunity cost of holding gold or silver. You're giving up a potentially decent, safer return elsewhere to hold the metal instead. So rising rates can make precious metals less appealing to some investors.
Right. Okay, that inverse relationship makes intuitive sense now. Let's shift focus a bit to something that feels like it injects instant volatility. Geopolitical tensions.
Oh, definitely. Geopolitics is a huge driver, especially for that safe haven demand we talked about.
Right.
During times of, conflict, political instability, major trade disputes, investors get nervous. They look for assets they perceive as safe, things that might hold up if other markets tumble. Gold and silver are right at the top of that list.
It's that flight to safety again.
Precisely. The perception is they'll retain value when uncertainty is high. I mean, you can often see prices jump almost immediately on major geopolitical news. Remember the Gulf War headlines?
Yeah, I do. The article mentioned that one and the Arab Spring back in 2011 as examples.
Yes. Both those periods saw noticeable climbs in gold prices, directly linked to that widespread uncertainty and instability. It really underscores how political risk drives people towards perceived safety.
So, looking at today's world, are there specific hotspots or tensions we should be aware of, things that could be influencing prices now?
Well, absolutely. Ongoing tensions between major powers, like the U.S. and China, it could create a kind of background hum of unease in global markets that can definitely influence demand. And then, of course, you have active conflicts in places like the Middle East and Eastern Europe. Those contribute significantly to geopolitical risk and uncertainty, impacting investor sentiment and potentially causing fluctuations in gold and silver prices. Keeping an eye on these global situations is pretty important if you're tracking these metals.
It certainly feels like there's no shortage of that kind of uncertainty right now. Okay, last big category here, but definitely not least, the human element. Investor behavior, market speculation.
Yeah, the psychology of the market. It's a very powerful force. Sentiment can shift really quickly based on, the latest economic reports, some geopolitical headline, or just general market trends. And those shifts, they can cause pretty rapid price swings.
That's not always just the cold, hard numbers, the fundamentals.
Not entirely, no. Speculators especially, they often react to really short-term news, sometimes just rumors. That can inject a lot of volatility, a lot of noise into the market.
Right.
Which is why, the article emphasizes, and I think it's good advice, having a long-term perspective if you're investing in precious metals.
Hmm.
Trying to time every little peak and trough based on sentiment shifts is, well, it's difficult, to say the least.
Yeah, sounds stressful. Okay, and the article also mentioned ETFs. How do they fit into this investor behavior picture?
ETFs,
Yeah.
exchange-traded funds. They've made it, well, way easier for everyday investors to get exposure to gold and silver.
How do they work, briefly?
Basically, these funds hold physical gold or silver, or sometimes contracts representing them, and then they issue shares that you can buy and sell on a stock exchange, just like a regular stock.
Okay, so easy access.
Very easy access. And because they trade like stocks, if a lot of people start buying shares of a big gold ETF, the fund itself might need to buy more physical gold to back those shares. That buying pressure can actually push up the underlying gold price.
Ah.
And the reverse is true too. If lots of investors sell their ETF shares, it might signal falling demand, and the fund might sell some of its holdings, potentially putting downward pressure on prices. So tracking the inflows and outflows of these big ETFs can be a pretty good gauge of overall investor sentiment.
Right, so they both reflect and influence the market.
Exactly. They're a significant part of the modern market structure.
Okay, wow. We've covered a lot of ground there. The article had a short FAQ section too, just hitting some key takeaways. Let's maybe quickly recap those to make sure they're clear. First, why is silver, again, more sensitive to economic and tech changes than gold?
Right. It really boils down to that heavy industrial use we talked about. Silver isn't just for investment or jewelry like gold predominantly is. It's needed for making things electronics, solar panels, medical tech, you name it.
So economic booms or busts, new tech trends, they hit silver demand directly.
Much more directly, yeah. Its price reflects both investment sentiment and industrial activity. That dual nature makes it generally more volatile in response to those kinds of changes.
Makes sense. Okay, and central banks, the main takeaway on their influence.
Their influence is mainly on gold, through managing their reserves. When they buy significantly, it's often seen as a bullish signal, boosting confidence in prices. Large sales can do the opposite. Their actions are basically big market signals about stability and the perceived value of gold.
Got it. And the last FAQ point, geopolitical tensions, can they really have a major impact? Yes or no?
Oh, absolutely, yes. Geopolitical uncertainty drives that flight to safety. Investors seek refuge in assets like gold and silver, pushing up demand, and consequently prices during turbulent times. We've seen it happen repeatedly throughout history.
Okay, clear. The article also just briefly mentioned an analyst outlook for 2025, saying some top analysts were quite bullish on gold and saw maybe a 20% jump for silver. Sounds like they're betting on these factors we've discussed continuing to play out.
Exactly. Those kinds of analyst predictions, they're usually based on weighing all these drivers we've gone through. A positive outlook like that probably reflects expectations around, say, ongoing economic uncertainty, maybe some persistent inflation, interest rate directions, and definitely that growing industrial demand for silver in new tech.
Right.
Of course, they're forecasts, not crystal balls.
Naturally.
But they're informed by assessing these fundamental influences.
Fascinating stuff. So just to kind of wrap it all up neatly, the price of gold, the price of silver, it's this really complex dance, isn't it, between supply and demand fundamentals, the big picture global economy, inflation, currencies, interest rates, geopolitical events, and just how investors are feeling.
Precisely. It's not just one thing. It's the dynamic interplay, the interaction of all those different forces that shapes where prices go.
Yeah. When you think about all those moving parts, it really drives home that the price isn't random at all. It's like a barometer, reflecting global shifts, fears, and optimism. Understanding these underlying factors, well, it definitely gives you a clearer lens for interpreting what's happening in the markets.
Yeah, absolutely.
We've really only scratched the surface here today, but I'm curious now, thinking about all this, what specific aspect really jumps out at you? For me, maybe it's that dual nature of silver. Anyway, it's clear this is a market with deep roots and plenty of ongoing action. Definitely invites you to keep learning,